gives me great pleasure to bring on board Dr. Anish, Managing Director and CEO of Mahindra and Mahindra Group. Now, bear in mind, Mahindra and Mahindra is one of those performing stocks in last 12 months. Everyone's happy, shareholders, management, employees, even car owners are very happy because XUV 700 really has been a delight. Even tractor owners are very happy because margins are strong, sales are doing very well. Everybody's happy, Mr. Shah.
Nikunj, thank you for the fantastic introduction. Yes, you're right. We are happy right now. We still think there's a lot more to do, and we are very well positioned with the growth we've driven so far.
What is that lot more which needs to be done? The repair work has started, subsidiaries are firing full cylinders, the domination in the tractor industry is intact, and XUV is doing SUV is doing very well. So what is the lot more?
Yeah, so Nikunj, you're right. First, let me just focus on what has been done. So we've clocked greater than 10,000 crores in profit. And that actually is a combination of auto farm and what we call services as well, because services has actually made up half our total profits, and that has been growing very well. We are number one in SUVs now. Our market share has grown from 13% to 19%. Number one in tractors by far. Number one in LCVs, less than 3.5 tons. Number one in electric three-wheelers. So from a market presence standpoint, that has worked very well. We've got a great suite of products. Our bookings continue to be very strong and much higher than, in fact, what we can produce right now. So our production is being doubled, and that will soon catch up, and hopefully we bring our wait times down. So from all perspectives, we are firing on all the cylinders. Now, the lot more to be done is to be able to get global leadership, because we've got leadership in India in auto, and that's something that we've got to now take across the world to be able to do a lot more with our growth gems. And they've been doing well, but we've just put a 5x challenge on growth gems to be able to grow 5x in the next 5 to 7 years. We have the ability to do so, and therefore that's something we're pushing for. So that's the next step for us. And again, we feel very good about where we are right now. Our teams have done a fantastic job, and I would give them a lot of credit. But we are not resting at this point.
You know, that's a very interesting point, Anish, that you made. Morning, firstly. Wanting to understand whether you've drawn anything constructive on the paper for your global foray, because, you know, you have a very large auto portfolio. So I'm wondering what within that would make it to the global shores.
So we have drawn out a plan, and it is going to be phase-wise. Our approach is whatever we do it really well. And therefore, phase one will be in markets that we have a reasonable presence today, markets like Chile, South Africa, Australia, and there we're going to go with the XUV 700, the Scorpio N. We may have a wider range of products as well. And beyond that, we will look at other markets. But first, we want to try to get to a very solid market share in these places before we expand further globally in the next phase.
I'll be very specific here in terms of understanding the re-rating moment for Mahindra and Mahindra, and it was the SUV dominance. Dominance is the real word there. Market share gain, new launches. Now, when we spoke to you last, you were excited about the way the order booking was moving. But what markets would like to know is that have the semiconductor issues been sorted, and are you likely to really clear up a lot of backlog, which really could give a lot of delta to your business this year?
So Nikunj, on that, semiconductor issues have largely been sorted, but they're not completely gone. So we still see an impact of about 10 to 12% every month with regard to something not working well on semiconductors. Our capacity has gone up from roughly 24,000 to 39,000 now, and that will go up to 49,000 units a month. And that will help us start bringing down the wait times that we'd like to. We, however, continue to see very strong demands across all our brands. And that is, again, a very positive sign. But as that continues, we will continue to increase capacity.
To you last time, you were said, look, we are also rebooting our subsidiaries, and some of them have been rebooted. But there are two subsidiaries specifically where two businesses specifically where we see a lot of volatility. The IT business, which is Tech Mahindra, and the finance business, which is Mahindra and Mahindra Finance. Could this year be the repair year for both those businesses?
So on Mahindra Finance, Nikunj, we've started a turnaround, and I would say the business has done really well. If you look at our gross NPAs or stage 3, it is down now to less than 6%. And this was as high as 16% at one point in time. But more importantly, there's a very strong focus on asset quality. And that focus will ensure that we don't go higher even in a further economic downturn. The net NPAs are 2.5%. So the asset quality is extremely strong. Disbursements were up 80% in the year. Assets under management were up 27%. So that business is on a very strong footing right now. I would still say it's halfway through its turnaround. There's more work to be done on that front, but it's on a very solid trajectory. Tech Mahindra has had some very strong positives in terms of large account wins and its customer centricity. There's a little more work, or in fact, a lot more work to be done on margins, because in margins, we are lower than the industry, and we are targeting in the short to medium term a 300 basis point increase in margins, which will help get TechM back on a very strong footing.
So broadly speaking, the ROE strategy of 18% on an aggregate basis, do you think for FY24 that is going to be the focus mantra?
Nikunj, on that, we actually delivered 20% this year. So from an ROE standpoint, we are well ahead of what we had committed. In fact, we had committed to 18% in about 5-year time frame. We got there in 18 months, and we will stay firm with that. Where our businesses are working right now, we don't see any issues in maintaining greater than 18%. What we have told our analysts and investors is we are not going to increase ROE, but we're going to increase growth, because we want to grow in a much bigger way. So on the ROE front, expect it to sort of vacillate between 17 and 20% over the next few years. And that will be a function of the investments we make and the time it takes to get the growth from our investments. But our focus right now is really growing all our businesses.
Take the clock back, Dr. Shah. We've seen a transformational growth in your auto business. We've seen an incremental growth in your tractor business. And we've seen a strong comeback, let's say, in Mahindra Finance and Mahindra Holidays. Which are the companies which for FY24 are at a transformational growth, and which are the companies which are at an incremental growth?
So I would look at auto continuing its transformational journey, especially as we look at international. On farm, there are a couple of areas for transformation. One is farm machinery, which is something we are targeting at 10x growth, as well as international. Mahindra Finance will continue transformation, TechM will as well. And beyond that, each of our growth gems, as I mentioned earlier, has a 5x plan. Sustain, a solar business, has already signed up for the 5x plan, and we have IFC as an investor who's underwritten that plan already. Our last mile mobility business got a valuation recently of $730 million from IFC. From IFC as it came in. Sorry, Sustain was Ontario teachers who had come in. IFC came into last mile mobility, and they've got a 5x plan that's laid out as well. And for each of our other businesses, we are there or almost there in terms of outlining that plan. And that's going to be a transformation across our businesses. So as I said, Mahindra is not just an auto business or a farm business. We also represent services across the breadth of all of the industries in India, and therefore are very well positioned with the India growth story.
But I wanted to, delve a little bit about what your reading is of the rural end of the economy, because, that is a large part of your revenue pie, at least when it comes to autos. Because not just government spending ahead of elections, but the other big factor is also going to be El Nino. And from what we understand is that El Nino years typically have an 8% impact on growth. What is your reading right now?
So we've gone and looked at El Nino over the last 50 years, and what we've seen is that from a tractor industry standpoint, there's really no correlation between El Nino and tractor sales. But that said, from an auto standpoint, we've got a lot more urban customers now. So there's a lot less dependence on rural. And there are a number of other factors that have been driving rural demand as well. And that is an increased focus on mechanization. Farm incomes have been better, and that's something that we see continuing to go forward. So we may see some years being a little slower in terms of overall growth for the farm business in particular. And this year we would expect a single-digit growth, for example. But on balance, the farm business is very well poised, and the other growth drivers will really help us take this business forward.
As a business, and I'm talking about the Mahindra Group here, which of your businesses will have the bazooka moment in FY24? I think to my mind, the previous fiscal was all about all that you did with your SUVs. What's going to be the leader for FY24?
I would look at financial services as being a leader for FY24. I would look at auto as continuing to drive strong momentum. And I would look for some of our growth gems as we saw Sustain and Last Mile Mobility come up as strong companies in F23. I'd expect one or two of our growth gems to come up as strong in F24, potentially with outside investors coming in.
Be looking at another large incremental top-up deal in the Mahindra electric business in FY24?
Because we actually have been very focused on growth with the capital that we have ourselves. BII came in as an investor because they were very keen to look at electric, and we felt that as a marquee investor, they could add a lot of value for us. We have not actively been looking for more funding in electric. We can fund it ourselves. But we do have an outreach from a number of global funds with a very strong interest in this space. So if there is a matching of minds, and if we do feel that someone can add value, then we may bring them on as an investor. But at this point in time, we've got 14,000 crores on the balance sheet. We've got a very strong cash generation across the businesses, and therefore we're not actively looking for funds.
I'm going to just talk about the macro setup for FY23, and then let's say get your outlook for FY24. FY23 was tough year for the entire auto industry. Margins were under pressure, commodity prices were higher, interest rates were moving against the consumer. All that will normalize in FY24. If that normalizes, what happens to you?
We show higher margins, and we continue even faster on our growth trajectory.
Can I assume that the ROE, which you've already at 20%, should actually stay above 20%? Because if you're talking about high growth, higher margins, and you want to be investing sensibly, that means logically and mathematically, ROE should be going higher.
So, Nikunj, we're very careful in our commitments. So our commitment continues to be at 18%, because what we will see is, as we invest, is normally a short-term impact in that investment. Over time, yes, it will be higher. But in the short run, we may decide to invest more in certain areas, and therefore we will stay with an 18% commitment on ROE.
Conservative here? Are you downplaying your optimism? Why do I get that sense?
My optimism, Nikunj, is on growth, because we want to grow our businesses multifold right now. And in terms of our investors as well, the discussion we have with them is, tell us if you want more ROE at the expense of growth. And their response always is, go for growth. 18% is a great number to have for ROE.
Every subsidiary has a different cycle, and the growth numbers for auto would be different. The growth numbers for financials would be different. It would be different for IT. How do you define growth for the Mahindra Group this year?
How we define growth is, for auto, let me take that separately, because you're right. Each business is going to have a separate cycle for growth. For auto right now, it's about ensuring that we can enhance capacity rapidly and be able to deliver on our commitments in terms of delivery of vehicles in India. Second is taking leadership in electric vehicles. And we're going to come out with 5 SUVs that are born electric next year. And that's a very big step forward. And the team is focused on it and on track at this point in time. And third is global leadership for auto. So those are the 3 key drivers for growth on the auto side. On the farm side, it's maintaining the strong market share. We have 40% plus in India. We've in fact grown that over the last couple of years as well. It's also looking at farm machinery and global growth. In Mahindra Finance, it's maintaining a strong asset quality, diversifying into a few other businesses. In Tech Mahindra, it's about margins. And for each of our growth gems, they're very well positioned in their industries. Take holidays, for example. We are the best in delivering holidays for families in India. And that's something that has huge demand. And for us to be able to do that 5x or 10x should not be difficult. Similarly with logistics, Our business is very well placed, has a number of services that span across the logistics industry. And we should be able to do a lot more. Same with real estate, same with our solar business. So there are multiple growth levers that we have across each of those businesses. And because those are mid-sized businesses, that's where we're really looking at 5x. Because 15 to 20% growth is easy. We've done that. But that's not what we would aspire for.
Right. Anish, I'm curious to know which of the M&M cars are you driving?
The XUV 700, though I continue to try some of the others from time to time as well. And I frankly love all of them. This is something that our consumers tell us, so obviously I'm going to be biased. But the cars that we've delivered over the last 2 years or 3 years have been a quantum jump over the industry. And that's what we're seeing in all the booking numbers.
Always wanting to ask you this question, but never late than, never. Better late than never. If for some reason the Mahindra car is not available, what would be your next port of call?
I would wait for a Mahindra car, as a lot of our consumers are doing, unfortunately, right now.
But there is a waiting period, sir, in Mahindra cars.
That's the other thing I wanted to ask. Has the waiting period on XUV 700 decreased or not?
You're letting me go away. There's a waiting period. Let's first understand. Okay, if the waiting period for Mahindra car is long, what will you do? It's an emergency, you have to travel. You'll have to travel.
I would look for getting a Mahindra car from a friend or renting one. Stay with the Mahindra car.
Smart one. Okay, Anish, we'll let you go on that note. Good chatting with you as always.
Yeah, same here. Thank you. Bye.
Okay.